try to get set up, because eventually something's going to happen, okay? And I know people do the boy that cried wolf routine on me, but it will happen. And when it does happen, if you have liquidity, you'll be surprised at how well, especially in the older age, okay, that you can sleep and make rational decisions. The problem about irrational decisions is if you're 100% in the stock market and you're getting murdered, you will make irrational decisions, because then you're getting hurt and you have no way out because you don't have any liquidity.
Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. I am joined today by Ted Oakley, a managing partner and founder of Oxbow Advisors, with more than 40 years of experience in advising high net worth clients in the investment industry. Ted, delighted to have you back in the show. It has been a while, so thank you very much for joining me today.
Thank you, Lucian. Good to be here.
Thank you very much. Ted, we are in December now. The 2025 is nearing its end. It has been a roller coaster. Tariff kicking in, gold hitting all-time highs, with S&P 500 more concentrated than ever in just a handful of tech names. From your perch at Oxbow Advisors, what's the one red flag in today's markets that keeps you up at night, and why should everyday investors care right now?
Well, Lucian, it has, the main one is valuation. Right now, if you look at valuations, we're 2 standard deviations higher than the norm. So can you make that a little crazier? Yeah, you could. But just observing, and you can't predict this, but just observing, when you're in an extreme one way or the other, either too low or too high, eventually that's going to change. May not be this next month or something, but eventually it does. And but that's the number one thing. If you look at valuation under any way you want to look at it, price to book, price to sales, particularly the CAPE ratio, all the particularly adjusted PE, it's off the charts, 40. I haven't seen it that high. I don't think I've ever seen it that high.
Yeah, that's a good point. I wanna hear your take on multiple topics over here. You've interviewed heavyweights like David Rosenberg and John Hathaway this year, both echoing concerns about sticky inflation and central bank gold buying. How does the global economic getting by mode you described in your market update evolved in this period, in December? Are we closer to a soft landing or a tariff-fueled hard one?
Well, I think the tariff thing, Lucian, is up in the air, because that may get rolled back by the Supreme Court. And I think I noticed over the weekend where Costco had sued the government to try to get a refund on theirs. I don't think that's settled yet, and so that could change things. But I think the biggest thing is rates are generally going to be higher over the next 10 years. So you have to assume that instead of a 2% average rate, it's going to be more like 3.5 or 4. And I don't think there's anything much the Federal Reserve can do about that. But people have to get used to that. And I think they're missing the point by trying to go long, buy 20 and 30-year bonds. That's probably a mistake in here.
Okay, fast forward to 2026. Gold price. Will gold break $5,000, or this really is vulnerable to a Fed pivot? What's your play for investors chasing it without getting burned?
Well, right now, for us at least, we were in the gold miners. We've always been in gold, but we were in the gold miners early in the last few years. And so we actually took a little bit of those off the table in the last month, 6 weeks. But for next year, I wouldn't be surprised if gold got some selling. But in the long run, over the next 2 or 3 years, I suspect it goes higher. You know, it's one of those things where gold is not like one of those stocks you can own for 5 or 10 years. It's usually something that has a sort of a defined life to it. When it's hot, it's hot. When it's cold, it's cold. Uh, and I think that we're just in a hot period right now. We still have our gold, but I think at some point in time you'll make new highs. I don't know what that number is, but over the next year or two.
Okay, so you took some profits off the table. That is always a good thing. I don't have any objections with that. However, what groups of stocks of miners is better to keep in the times ahead? I'm talking, of course, the explorers, the developers, the
Yeah.
producers.
Well, I think you keep the big ones. In other words, you're going to keep, for us as Agnico Eagle is our largest holding, and obviously that's a very well run gold miner. That you know you keep some of that in there. A lot of people own Newmont. We don't. We have owned it before, but we don't own it this time. But it's one you could put in there. I think you also want to own the royalty companies. We have Franco-Nevada and Royal Gold, Wheaton, Precious Metals. Those are all royalty companies. So we still keep all of those. And then we have a small gold company called Southern Cross Gold. It's not producing yet. It may be the best gold mine in the world eventually. It's in Australia. It also has a lot of antimony with it. So it's on some very strong hands, which you would recognize. But it's small, and you really you'll have to wait and see what happens when they start producing. But I think it's an interesting small company.
Okay, so no the exploration place for you at this moment, right?
Not other than Southern Cross.
Okay, got it. What about the silver miners? How is your portfolio structured there?
Well, our biggest holding is Hecla. We think Hecla for us is the best in North America as far as silver. Now we own silver outright too. We cut back. We cut back on a couple of, but not Hecla. We've got all the Hecla. We still have all of that. It's just a strong stock. It's a well-run company. It's sort of our favorite in the silver area.
We didn't touch on silver fundamentals, so do you see silver outperforming gold next?
Well, it has a little bit in the last month, for sure, and I guess it could. I mean, a lot of people felt like if you got through $50, that for some reason or another you would probably get into a mode where it would just really take off. And I guess to a degree it has, if you look at 56 or $57. But I mean, a lot of people think this silver will go to 90 or 100. I don't know. I just know we own it now. If we feel like it's fully priced or it's the end of the run here, we'll probably take some off. But it's just one position. But I don't know where it heads to. But it could do well, can do well for sure.
Yeah, agreed. What about financial market correction? Do you see really in 2026 some just like I said, correction, or do you see in the cards maybe more of a market meltdown? We have been like more than 16 years in this bull market. If we take COVID, of course, time out of the equation, is this has the finally time for correction coming or not? Or we still have too much liquidity in the system that will fuel this market for the many years to come?
Well, Lucian, what happens in these long periods of time where the market stays pretty good and you don't have sell-offs for very long periods is everybody gets accustomed to that.
Exactly.
And so the longer it goes, the more everybody is in. And that's what's happening now. Everybody's in and they're staying in. maybe we have some more money that gets in, but there's some point in time where everybody's in and there's nothing left to do really but sell. And you have to remember the largest holders are the baby boomers, which average age is 70. They're going to be selling things pretty soon. And I don't know where it is, but I would guess, though, that sometime in the next 2 or 3 years you'll make, and maybe it's just 26, I don't know, but with prices where they are, I think you'll make a high. Maybe you move the S&P on up to 7,000 or 7,500 or something. I don't know. But somewhere out there, you're going to run into another sort of generational bear market. Now, that's the one that all these people that have been accustomed this last 15 or 16 years will not realize what's happening. And it always plays the same. They won't realize what's going on, so they'll probably lose a lot of money.
Yeah, you're probably right. Let's touch on energy and commodities. You've long championed them for diversification. So, do you see, let's say, oil and gas, do you see them as the best contrarian / speculator play in 2026?
Yeah, I think energy all the way around, oil and gas, are the cheapest things on the board right now. I mean, it's a very small percentage of the S&P, something like 3%. At the highs of 30 or 40 years ago, it was 30%. And so, it makes up very little. But if you look at dividends paid, the potential, and that's with $58 oil now. You think about what happens if you go to $150 oil or $200 oil. These will be the red hot stocks, and you're going to have to own them a while. And for us, that's okay because we're used to owning things 5 to 10 years. But I think people don't realize how cheap that group is. And I really believe that's where you're going to have the most upside for the money and cash flow, by the way. The dividends are outstanding in the energy area.
Yes, definitely. Where do you see, okay, beside oil and gas, where do you see the biggest torque upside when it comes to commodities beside oil and gas?
Well, I think it's in the hard commodities, not the soft ones. But I think if you look, but also for us, it's like fertilizer, copper, you've got iron, all the hard assets is what we like. And we don't own, any of the soft stuff, sugar, coffee, soybean, and that kind of thing. But we own the hard ones. And I think that's where it happens because you don't have enough of that in the world. And so if you're going to expand the world, you're going to have more of that. And everybody started to hoard that stuff, no matter what it is. And that's kind of where we are. So I think you have to have exposure to that in order to really, really do well. The reason we own fertilizer is because farming and all that sort of thing is going to get stronger and stronger and stronger, or needed, I should say. And that's something we own in addition to some of the other metals and various things.
Sure. How is your current view on Bitcoin, on this roller coaster ride we are having? And actually, is Bitcoin's digital gold narrative holding water, or is it physical gold that's still only is a true value haven for wealth preservation?
Well, we don't own Bitcoin, and the reason we don't is because we don't have anything to hold on to, literally. I mean, I've said this numerous times, but if you don't have any electricity or you don't have an internet, you don't have an asset. So there's numerous things can blow you up. And of course, I understand. I mean, a lot of people, they're going to think I'm crazy for talking like this, but I think in the end, what'll happen is people will lose, particularly outside of Bitcoin and Ethereum, they will lose millions and millions of dollars on crypto. And it'll be one of the worst catastrophes that ever was. But it already has been to a degree. And I don't think there's any, I mean, if you look, there's a Financial Times article this weekend about how much money is run through the crypto system by cheats and swindlers and mafias. I mean, it's billions and billions of dollars, and a lot of them are using stablecoin. That's the big savior now. But you have to look at that and think that's not going to last. They're going to bust that system some way or another. And it's just not the kind of thing we do. We like to buy things that we know we can get some, gold for us is just a small percentage. You're not talking about something that's huge, but for the majority of what we own, we get cash flow, we get dividends. We own a company. We own a breathing, acting company that gets up every day and makes money and produces a product. That's what we own. Well, you can't get that out of Bitcoin. And I know it can go higher, no question about it. And if it does, I'm happy for everybody. But I don't want to play the game where, for very much anyway, of where the only way to make money is to find a higher buyer. Now, granted, gold is the same way, by the way. But we don't stay long with gold. It's not one of those things we own for 10, 15, 20 years. We think we're in that cycle right now, but gold is gold too, by the way. It's a hard asset. You can grab a hold of it and take it home with you.
Yeah. We didn't touch on geopolitics. How do you see this mess, global geopolitical mess in the world? And what's the next black swan event you expect in 2026?
Gosh, Luciana, I'm probably not the person to answer that question, but your world travel better than I am. So I imagine you could answer it better than I could. But everything's messed. Nobody trusts anybody. That for starters, that's a big problem. Nobody trusts anybody. And even in the countries themselves, U.S. included, nobody trusts each other either. So, it's one of those things where you look around and you know that there's a big mess going on, and I don't know how it all ends. My guess is that something will happen that the people didn't expect. And I don't know what that might be. But again, I just have to every day look at the companies we have a chance to buy. Try not to be too large on the geopolitical scale because that doesn't impact what we own.
Sure. Ted, tying into your new book, Second Generation Wealth, you're emphasized teaching kids financial discipline amid market mania. What's the toughest lesson from your army days in 30 plus years in finance that you drill into the next generation right now, especially with the inheritance taxes looming? What's your take?
Well, I think if you look over the past month in the Wall Street Journal and Financial Times, you have numerous articles about teenagers and people in the military, young people, all kinds of people that are college kids that are trading, and they think they've had the holy grail now. They figured it all out. This is an easy thing. It's like playing a video game. You just plug in and you make money, and heck, that's the way it goes. They were doing the same thing with crypto. I think that group will have a hard landing, as all groups do in their 20s, by the way. That's not anything new. Almost all groups in their 20s end up realizing they chased the wrong dream. And so my advice to them would be, first of all, start by saving some money. That'd be the first item I would tell you to do, is start saving some money and quit trying to bet the farm on betting and crypto and single day options and all this stuff that's not investing, because all that stuff will go away in time. And start saving some money and then buy some companies. There's a lot of great companies out there that are going to be around a long time, and they'll get cheap one of these days, and own some of those companies and be a shareholder. Look at the annual report, look at the balance sheet, the income statement. Start trying to figure out how to invest, as opposed to just buying an S&P index fund and hoping you'll be okay.
Yeah. When you say save money, what would you advise to investors in the terms of holding cash positions? How much would it be wise to hold cash today in expectations of some, let's say, like we call it, market crash correction, where you can invest your money? And how much cash should we hold?
Well, when I say cash, Lucian, I'm talking about short-term treasuries, say 90-day treasuries or 6-month treasuries. It has to do with age, though. If you're
Okay.
younger, 20s and 30s, I mean, you can hold 15, 20% is probably tops to hold in liquidity.
Yeah.
But if you're over 65, to me, well, you need 35 or 40%. You're not going to be able to go back and go to work and make a big hit again. And you might as well take advantage of these high interest rates, park some money in those treasuries. You won't pay any state tax on them. So try to get set up, because eventually something's going to happen. Okay. And I know people do the boy that cried wolf routine on me, but it will happen. And when it does happen, if you have liquidity, you'll be surprised at how well, especially in the older age, okay, that you can sleep and make rational decisions. The problem about irrational decisions is if you're 100% in the stock market and you're getting murdered, you will make irrational decisions, because then you're getting hurt and you have no way out because you don't have any liquidity. So, rather than going to the cocktail party and tell everybody how wonderful you're doing in NVIDIA, give yourself a break and recognize who you are and where you are in the lifespan, and give yourself liquidity. I mean, it's an insurance policy, and there's nothing wrong with it.
That's a good advice. Ted, how can people reach out to you?
The best way, Lisa, is just go to our website, which is oxbowadvisors.com. And we're very transparent. Everything we do there is listed, all the interview books, actually our market letters. And we do a lot of monthly and quarterly takes where we talk about what we're doing in the firm, what we're owning, what we don't own. We'll have a new market letter coming out probably around the 5th or 6th, 7th of January. And, but it's all there, oxbowadvisors.com.
Ted, I want to thank you for joining me today in the show. Really, I enjoyed our talk, and I look forward to host you again sometime soon.
Okay. Thanks a lot then, Lucian.